if it breaks a critical level, which is a pre-market high or a pre-market low, what do you do, everyone?
Yep.
Hammer it.
Yep. You buy the call or you buy the put, you put the stop just the other side of it and let it run. So right here, you see it? So
Yes, sir.
yesterday, that was the put. And then right here was your stop, right? Which is just above it. That's it. And then I said, don't touch it. I didn't want nobody touching it the rest of the day. That's it. There was no magic to this. Now, if we look at the time that this broke, let me look at the 1 minute. This will really make you guys sick. The time that this broke, remember, because you guys should all be breaking it down like this, right? Was around 9:44. Let's see, 189. Let's see, 189. Remember, I'd always do around one bracket, so it'd probably have been what, the 190s?
Yeah.
So if you look at this and we go to the chart,
189.17.
yep. And we go back to yesterday. Is this yesterday? 412. At what time did I say?
9:45.
9:44.
Yep. Yeah, 9:44. Yep. Okay. So that means right here. Right there. There's your buy, $4.35. See it? Even if you bought it at the very end, sorry, it's lower. Let's buy it at the very wick. If you bought it at its worst spot, $4.22. Let's see what that would have went up to if you'd have left it alone. Uh-oh. Oh, boy. Oh, boy. Oh, no. $4.22 would have got you up there around $10. You guys see it?
Wow.
This is what I'm talking about. All you had to do is leave it alone. If you would have bought one contract yesterday for $422, which was that put, you would have walked away with $1,000 or $600, close to 600 profit yesterday off of one contract. See it? Your risk, by the way, would have been around $40. So your risk was 40. You would have made 600. Do you guys see it?
Yes.
This is what I'm
Sure
talking
do.
about.
And
And
10
that risk-
contracts would be tenfold.
Exactly. And for some of us, Mark, 10 contracts is nothing. That I don't even start with 10. I usually start with 20, 50, 100, sometimes 1,000.
And if you think about it, a $400 risk for a $6,000 reward.
But do you see what I'm saying? So the risk to reward ratio is absolutely ridiculous. And why is the risk so low, Mashulo? Why is my risk so low?
I don't know, Coach.
Because my stop is
Stops.
so
Stop loss.
tight
Stops,
where I
right?
bought it. My stop is like a penny from where I bought it, right?
Got it.
So it doesn't come back. Let's look at this. Let's go. Yeah, but Coach, I bought this one and it pulled back to here. Okay, then you buy it again there, right? I told you guys, this is the move. This is the stop. You got to give it a little bit of range, not much. Hell, I guarantee it won't even be. I know for a fact this ain't 10%. So this is about a $420 contract per one for this put. And your risk would have been less than 5% with this stop, right? And what I was trying to tell you guys, and this is the thing, and this is going to take a while, right? And I don't care if you're a seasoned vet. I don't care how long you've been trading. This is the part that's going to take a while, is because we're so accustomed to just taking profit. It goes green. I want my money. Greed. That's why I said buy one, leave it alone. Because for some of you, as you heard yesterday, who was it that held it to 150% and then got stopped out at 100%, which it could have, by the way, ran all day, but good job to you. Still 100% trade on one contract made more than any other time. And that person was averaging, what do you say, under 10% typically on a contract. So that is a 10 times the size of a normal gain for that person yesterday, if you guys heard that. And it had less risk. So that was a 10 times gainer for them, less risk, biggest trade they've ever make. All they had to do was buy very small position and don't touch it, right?